Chapter 5, Problem 2, Part 3, doing the accounting for 2019. What you're looking at is what we did for 2018, and I want to draw your attention to these numbers right there. Because 2018 was our first year in business. 2019, not to belabor the point, is our second year in business. So we need to start by filling in the balances for the beginning balance, the opening balance. And this is just common sense if you think about it. If you're running a business, are you going to throw away all of this stuff and start again in the beginning of the year? I don't think so. And if you are, when you throw away that $77,000 in cash, please let me know what your address is so I can come pick your trash. So I'm going to just copy those numbers over. So for cash, I've got $77,000 as my opening balance. For accounts receivable, my opening balance is $9,000. For my allowance for doubtful accounts or uncollectible accounts, I have $450. My common stock, I have $10,000. And my retained earnings from last year, my earnings from last year that I earned and didn't share with my shareholders was $75.50. Keep in mind, this is 2019. This was 2018. So you see where those numbers came from. We just copied them over from the bottom right there. So now we get to start all over again doing the transactions for this year. And I could hear you all going, yay, more transactions. I know. You just can't get enough of this stuff. I'd like to say you're going to thank me someday, but that'll probably be the day when you get out of this course and you're done with accounting. Okay, we wrote off an uncollectible account for $650. It's a hell of a way to start the year, but okay, we'll do it. So when we write off an account, we write it off against accounts receivable, and we write it off against our allowance. And I realize we wrote off $650 and we only had $450. That's okay. That happens. So the next transaction, we provided $88,000 of services on account. So, $88,000 of services on account. So there's the $88,000, and that goes to retained earnings. That's the R. That's revenue. The next transaction, we provided $32,000 of services and collected cash. This was on account, this was cash. So now we got $32,000 in cash. And we earned it, that's revenue. That's the R. And revenue minus expense, retained earnings, $32,000. Now, in 4, we collected $8,000 or $81,000 of this $88,000. That was a nice payday. So our cash went up $81,000. Our accounts receivable went down $81,000 because the people who paid us no longer owe us anything. So that's all we need for there. That's not revenue because we already accounted for that revenue up here. Then the next transaction, they paid $65,000 of salaries for the year. Again, the magic word there, paid, cash goes out. So we have $65,000 in cash going out. And that's $65,000 over here. And we'll mark it with a minus just so we keep it clear. That's an expense. That's the E, revenue minus expense. And then they tell us that they estimate, again, that 5% of the ending accounts receivable balance will be uncollectible. Well, that's fine, but we have to figure out what that is. So, let's take a look at the accounts receivable. We have $450. That's what we started with. Then we subtracted $650. Now we have to figure out what's the balance in our accounts receivable. Our accounts receivable is $9,000 minus $650 plus $88,000 minus $81,000. You see where all those numbers came from? And that comes to $15,350. And I'll write that here because if I don't, I most certainly will forget that. $15,350. And they tell us that they want 5% of that set aside as an allowance for uncollectibles. Well, the allowance for uncollectibles, 5% of that works out to be, I don't know. Let's figure it out. Yeah, my batteries are low. I'm too cheap to buy new ones. So, my $15,350 times, they want 5%, 0.05, $767.50 will be a sport. We want at the end of the year this to be $767.50. $768. That's what we want to have when we're done. That's $768. So when we do this, we find that we have minus 200. So we have to add that 200 to get back to zero, plus the 768 to get to where we need to be. So our adjustment for the year end is $968. Let's go through that again. Want to make sure you got it. When we started, for lack of a better term, we owed the kitty $200. So we had to put that in just to get back to zero. So we needed at least $200. Then it says we want to show that at the end of the year we'll have $768 set aside that we believe we will not collect. So we have the 768 plus the 200 that we need to make up. We have to, and I wrote down the wrong number. This is the 768 because that's where we want to end up. But our adjustment right here has to be the 968. That's where I meant to write it. And think about it. If you just do the math, 450, and if you're like a mathy kind of person and you want to do it this way: 450 minus 650 plus X equals 768. If you do the math, you do the gazintas and the gazaltas, you'll come up with the same exact number that you need, 968. Okay? That's how we came up with that number. The cash, just adding this column, we come up with 125,000. Common stock, we didn't sell any more stock this year. We did have some changes to retained earnings. We had beginning retained earnings, so now this column will be retained earnings plus income. We put that all together, we come up with 129,582. So that's the equation for 2019. We'll finish this up on the next part, the financial statements.